Hello, welcome to European Open briefing for Thursday, September 27th. I'm Rafi Bayojan, currency analyst at XM.com, and we're going to be taking a look at what's happening in the currency markets today. The US Federal Reserve raised interest rates as was expected yesterday. We saw the dollar initially dipping after the announcement, but then it started moving higher, and we can see the dollar index is the best performer this morning. It's up by around 0.35% at the moment at 94.53. Against the Japanese yen, it is weaker though. Yesterday it touched a fresh 2-month high, but we saw the yen also rising broadly this morning as there's a bit of risk of sentiment in the markets. We can see Asian indices closed in the red, and in Europe we also have a negative open. The main concern in Europe is the delay in the announcement of the Italian budget. We're seeing the euro down by 0.2% at the moment, at around 1.1713. Sterling is also lower. It's feeling some downside pressure as Theresa May, the UK Prime Minister, appears to be losing support for her Chequers plan within her cabinet, and also the opposition Labour Party are reportedly planning for elections, fresh snap elections, as they're betting that Theresa May would lose any vote in Parliament on any Brexit deal, and that would trigger fresh elections. Looking at the risk-sensitive currencies, the Aussie and the Kiwi both lower against the greenback. The Kiwi is down by 0.2% at 0.6642. We had the Reserve Bank of New Zealand policy meeting late yesterday, early this morning, depending on your time zone. As expected, the RBNZ kept interest rates unchanged and stuck to its neutral stance. There wasn't much reaction to that, and it's mainly the risk of sentiment that's weighing on the Aussie and the Kiwi this morning. The Canadian dollar is also struggling. It's currently trading at 1.3047, down by around 0.23%. So the US has signaled that it will go ahead with bilateral deal with Mexico without Canada, as the US and Canada appear no closer in terms of agreeing on new terms for NAFTA. And looking at commodities, we can see gold prices are slightly higher despite the fact that we had that Fed rate hike yesterday and we've got a stronger US dollar. Oil prices, though, are extending their gains. They're up by more than 1%. WTI trading at $72.53 a barrel, despite the fact that there was another increase in US crude stocks at yesterday's EIA inventories report. The main concern is a tightening market as that deadline for the ban on Iranian oil exports nears which is due to take effect in November. And we can see oil prices up there at the top of the performance table, followed closely by the dollar index and dollar franc, and at the bottom of the table, Aussie dollar, pound dollar are some of the worst performers. So looking at the dollar yen pair now, we can see that prior to the Fed, immediately after the Fed announcement, which we saw that knee-jerk reaction, the dollar spiked to 113.13 against the Japanese yen, but then we saw the dollar retreating against the Japanese yen, though the dollar index against other currencies has been moving higher. So there was some speculation that the Fed would remove the statement that monetary policy remains accommodative. So that phrasing has been removed from the statement, but in the press conference, Jerome Powell said that it's a sign that monetary policy is proceeding in line with expectations and doesn't signal a policy change. Some had interpreted that as meaning that the Fed is getting closer to its neutral rate, which would mean a slower pace of rate increases. But Powell has said that that's not the case, and they will continue to raise interest rates gradually over the next 2 to 3 years. And the Fed's projections were also pretty much unchanged from the June June projections, they're forecasting one more rate increase for 2018, 3 more in 2019, and 1 in 2010. That, although that's not as hawkish as many had been fearing, neither is it as dovish as it could have been. So the dollar is broadly higher this morning. And looking at the single currency now, we can see there's been a sharp sell-off at the start of the European trading session. It briefly fell below the $1.17 level. So there are reports that the Italian budget has been delayed as they try to work out the details. Some reports suggest that Italy's finance minister Giovanni Tria is threatening to resign as he's against having a large deficit, mainly deficits above 2% of GDP. He's pushing for something closer to 1.5%, with 1 and 1.5% of GDP. But the coalition government made up of the Five Star Movement and the Northern League are strongly pushing for a much higher deficit, as they want a universal citizens income to be introduced in Italy. So all of that is upsetting markets. We're seeing a spike in Italian government bond yields, and all of that is weighing on the euro. And a quick look at the Canadian dollar. We can see the loonie coming under pressure over the past couple of days, as there's not looking likely there's going to be a NAFTA deal anytime soon, and the two sides look set to miss that US imposed deadline of October the 1st. The US has said that they will likely go ahead with the bilateral deal with Mexico without Canada. We're seeing the loonie slide to 1.5 week low of 1.3059 against the US dollar. It's currently slightly off those highs. But the losses aren't as sharp as could have been, given that Bank of Canada is expected to raise interest rates in October, so that's providing some support. Overall, though, the relations between the US and Canada isn't looking very good at the moment. President Trump yesterday in a news conference said that we're not very happy with Canada's negotiating style, and they don't like their representatives very much. So all of that could see the loonie coming under further pressure in the coming days. It's going to be a busy day for economic data. We're going to have durable goods coming out of the US, as well as GDP revisions, and in the European session we're going to have the Eurozone economic sentiment, plus several central bank speakers, including the heads of the European Central Bank, the Bank of England, the Federal Reserve, and the Bank of Canada. That's it from me. Thank you very much for watching, and have a great day.